Bailed-out African Bank has plunged to an annual loss of 9.3 billion rand. It's warned of more pain ahead of its cutback on risky lending. The unsecured lender buckled under bad debt in August, forcing the government to appoint external administrators to oversee restructuring. African Bank curator Tom Winterboer says the disappointing results are not surprising given the crisis that the bank had plunged into.
Initially, one didn't realize the extent of what the loss would be, but being around, I think certainly, additional provisions for bad debts had to be made and so on. So we ultimately not surprised at the loss. And one can ask yourself, so how does it affect the good bank going forward? The intention is to leave the bad assets in the bad bank with a good bank, then going ahead with the good assets.
The history of African Bank, as we know it, was that it had a particular lending criteria that landed it to where we find it today. Has the company tightened its lending criteria, and has it changed its model, operating model?
Yeah. So just to start with your second question, operating model hasn't yet changed. In terms of the lending criteria, it has been tightened since August last year. The important thing is to make sure that you lend to customers that are able to repay you, and clearly we've had to tighten the criteria around that.
Just last week we heard of news that Able was placed under business rescue. How does this affect everything? And what are the hopes that it will be rescued? What will change?
Yeah. I think there's perhaps a bit of a misunderstanding in terms of how the thing fits together. Very simplistically, you've got Able, who's the holding company, and that is not a bank. We then have African Bank, the operating part, that's the bank that's under curatorship. Then you have StanGen, which is the insurance arm, and then you have Ellerines Holdings. So Ellerines Holdings has been placed under business rescue, and so was Able then last week. That would not affect the operations of African Bank under curatorship as it is in the moment, together with StanGen, which is a separate company and which is profitable. The intention then is to take the good assets from the good bank, hopefully doing the transaction of bringing StanGen into a new good structure, containing then the good bank and StanGen. But so the Able business rescue, one just needs to negotiate with the business rescue practitioners that have been appointed.
Understood. Let's talk about this good bank that you keep on referring to. We anticipate it to be in operation around about October this year. How does it impact on your current customer? So I'm an African Bank loan holder. What should I expect to see differently that this good bank will be doing?
Yeah, I think firstly in terms of our lending, what's happened to African Bank is we had a certain target market, and we found that a number of our customers, and in fact many of our customers, sort of through growing and in terms of their own incomes, have moved out of the target market and moved to other banks. So we're hoping to retain those customers or either bring them back if they've left the fold. And then in terms of our lending criteria, as we said, that has been tightened. Otherwise, the important thing is for customers to continue paying as they're obliged to pay.